Welcome to Yellow Tunnel, Tradespoon, and Tradier Hub. My name is Karpel. This is our weekly broadcast of live trading room and also the broadcast on Tradier Hub platform in terms of macroeconomic news, earnings, and what to expect next. Now that we are starting the new earnings season, there are some geopolitical risks. Escalation of war in the Middle East, and higher inflation. So those are the three vectors, three forces that are pulling the market in different direction, and we're going to discuss them today. Cecile, hello. Let me know if you can hear me. Perfect. All right, for those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers and on Tradier Hub, or if you're on broadcast on YouTube or X. The difference between Yellow Tunnel and maybe other subscription or news is that my background is technology. So we have a team of financial engineers. I have master's degree in computer science. I work as a CTO of several publicly traded companies. And build a lot of models. We have a team of financial engineers, best in class, that are building new AI models, neural networks, to determine the trends, support, and resistance levels. And then I'm using these signals, right, to actually trade in my live account. So that's the difference. Disclosures are important. I'm going to go to a specific trade idea, so it's very important to look at the disclosures. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, let's jump into market. Looking at the spiders, right, using our neural network model, the support is at 497. Overhead resistance is at 505 based on short-term predictions, and you can see spiders reached 505, right? The session high is actually 505, 504.13, and we're as low as 498. So you can see that the model, these predictions are posted the night before. I'm doing a good job predicting key support and resistance prices. It does show that the trend continues to be negative, downward pressure. Potentially the next level is 480. If the current level doesn't hold, and we are trading below 50-day moving average, then the next level would be 480. There's some support. I mean, we're basically closed the gap after the NVIDIA earnings, right? Those are the two gaps that we had. And if this level doesn't hold, then I think January high, right? January high is around 491. Lower Bollinger Band around 494. So 490 to 495, I think there should be at least a pause in terms of market pullback. We do have options expiration, right? So there are a lot of repositioning. Let's look at the repositioning data. We looked at the stock forecast toolbox. Now let's see how people are positioning going to options expiration. Let's make sure Tradier everything is good. All right. So let's take a look. So spiders, right? So we do have options expiration tomorrow. And today and tomorrow, you can still see there's quite a few support at 490 and 494 level that we just discussed. Pretty large positioning that will expire tomorrow. And the next level would be April 22nd. There is not much. April 23rd, not much positioning. So still very small position. So now we have to go into the main position, monthly expiration, which is May, which will take over. So there is some 20,000 Vanna around 490. That's the next level. So I think 490 should be at least a pause. Not a massive amount of put buying. So I think as people are going to close their contracts in April, they will reposition, and the next level after 490 is 480. It's better position, 40 to 50,000, but you also see that the position in 420 and 450 is also growing every day, and dealers have to adjust. People buying puts, for market makers to be delta neutral, they have to hedge, and that could push the market closer and closer to 480 and potentially even 450. Right? That's not off the table. As you can see, the positioning is growing. So I would be cautious, right? I think bears are in control. As long as we are, and the top is set, so there is, maybe 4% to the upside, but to the downside, we could get, if 480 doesn't hold, we could get potentially reach 50-day moving, 200-day moving average, like we did in small caps. So that's around 465, 470 level. So which is not off the table. So I think risk versus reward, there's more risk to the downside. I think as long as the market below 515, bears are in control. Market is oversold. I mean, we do have Netflix earnings. Maybe they're going to hit a home run. And then the market could bounce back. But I would be a seller into the rallies as we approach in 50-day moving average or 515. One of the major forces that drive in the current market conditions are 10-year yield, right? 10-year yield reached 470 level. It's a critical level. With the expectation of rate cuts are now very low, right? Powell reiterated that potentially there might not be a rate cut. It all depends on the data, but definitely repricing based on the hotter than expected inflation. Now May and June is off the table, and potentially September or after the election that the first rate cut will be delivered. And again, this is all just a guess game or around the inflationary data. But for the 3 negative prints in inflation, you need now 3 better than expected inflation to kind of give confidence for Fed to lower interest rates. So I would imagine that April, May, even June, Fed will not change their mind, and they will still kind of reiterate their message that potentially there is no rate cuts. So if that's the case and market actually jumps above 470, I think that sell-off could accelerate, or the 2-year yield jumps above 5.2%, right? We're at 5%, above 5%. If the 2-year yield jumps above 5% and 10-year jumps above 4.7, I think the market is going to pull back more. Dollar continues to be strong. It's retesting October highs, right? Market was significantly lower back in October, September of last year, and dollar is already in that level. And in terms of high yield, pretty sharp pullback. So you do see widening of the spread between treasuries and high yield junk bonds, which is negative for the market. It broke to 2024 support. I mean, it's no near October lows. But I would watch 200-day moving average and this overhead resistance, right? That's also a pretty important level. But for now, it's a pressure to the downside. QQQ continues to pull back. Semiconductors, Taiwan Semiconductors, ASML earnings broke through the 50-day moving average, continue to pull back. Next level is the gap after the NVIDIA earnings, right? So semiconductors, very highly correlated to SMH. SMH is highly correlated to NVIDIA. I think NVIDIA is close to 30%, and it is trying to potentially close the gap. So that's semiconductors. What else? Small caps have been weak. They're already making new lows. I mean, within less than 1%, wasn't 1%, 1.5% of 200-day moving average. Regional banks continue to underperform, reaching February lows. ARK Innovation broke through year-to-date low, and at this point on its way to retest maybe 40 or 38 level. Strong price action in silver. It's consolidating after this large volume. It's now going sideways, consolidating. And then what else? Bitcoin, right? Everybody's watching Bitcoin. Bitcoin is fighting for the 50-day moving average. NVIDIA is fighting for 50-day moving average. Peers today slightly below the 50-day moving average. And crude oil, pretty sharp pullback from the 87.5 back to almost 80 level. 200-day moving average and 50-day moving average. On the concerns that higher for longer inflationary pressure will, cause, pullback in demand. So those macroeconomic conditions, I would watch tomorrow. VIX is stubbornly staying at 18. We haven't had VIX staying for such a long time at these elevated levels. It hasn't happened since September, October. Right? So I would watch VIX. I would watch the 20 level. I think if VIX jumps above 20, you might have kind of another leg down in the market. For now, it's just kind of an orderly pullback. There is no, disorderly jump in volatility. And I don't think we had it in September, October either. It was kind of just slowly grinding to 22 level. So that's macroeconomic conditions. One way to hedge your portfolio. I am long spiders put spread. So you could buy SH if you're not comfortable trading options. You can buy SH, you can buy gold, or you can buy, which are inversely correlated, or you can buy spiders put spread. So I do have 495, 475 put spread, which basically gives me a hedge to this 480 level because I think market could reach 480 level. So for now, it would be market neutral, maybe slightly negative bias since, I'm not sure what would, the earnings, right? If Netflix hits a home run and next week Meta and Amazon deliver strong earnings, then the market will reverse. So a lot of it depends on inflationary data, which we're not going to have in the next couple of weeks. But so it's all either geopolitical risks, which kind of on the back burner right now, and people are keeping an eye on earnings. There's some positive news, right? We have LI Financial had a strong earnings, up 7%. United National Health Group had a strong move to the upside after the earnings and continues to grind higher. And today we have Netflix earnings, and tomorrow we have Procter & Gamble, American Express, Schlumberger, and continuation of regional banks, more regional banks announcing earnings. In terms of credit cards, Discover Financial deliver better than expected earnings. It's up 3.5%. So you do kind of have a mixed bag where some companies are underperform, but some companies like United Airlines and Delta Airlines are delivering better than expected earnings. Right? And you can see United Airlines is at 52 level. Any questions? John, hedge. Yeah, so in terms of hedging, I have 470 put, 495, 475 put. I'm waiting for some kind of a spike in volatility and volume. For now, it's kind of, most bulls are still bullish. We're approaching 5% pullback, right, from 525 to 499. That's around 5%. Nothing big, nothing major. Last time we had 10% pullback, right? This is a 10% pullback from August to October, 11%, 10, 11%. We're at 5. Another 5% will take us to around 480, 475 level, basically 200-day moving average. So again, market neutral, slightly bearish, and one way to hedge is buying put spread. So I am 495, 475 put spread. In terms of earnings, regional banks not very liquid. Procter & Gamble, XP, Netflix is $600 stocks, $200 stocks. So one contract you're trading $21,000. What did caught my attention is Schlumberger, right? It had a significant pullback. Oil prices were, for the most part, higher in Q1. It did pull back, and in terms of positioning, our friends at TradeHawk and in Tradier Hub developed these tools in terms of positioning. So you can see very similar positioning that we had to United Airlines. Right, we were talking about positive and negative VANA. Let me see if I have my United Airlines somewhere. Sorry, United Airlines. Let's see, where is United Airlines? So United Airlines, right, there was very large negative VANA, meaning that people are buying calls very aggressively bullish going into the earnings. and we've seen that when the earnings came out, we stayed at 46, and then despite the market sell-off, bulls were able to push the market all the way to 50. Now actually closer to 52 level. So it shows you the positioning does matter, right? Even though United Airlines is still losing money, right? Just not as much as everybody as it is, but it did make this 4 or 5. I don't even know how many standard deviation move it did. Schlumberger looks similar, right? It looks similar, where there's a pretty large position around 55 strike. So I'm inclined that energy is oversold and could bounce back. So let's just make sure it's in the earnings power traders service. And I'm inclined to do probably a calendar spread, right? Because market is under pressure tomorrow, so we might not get to 55, but maybe the next week we could, right? So Schlumberger trading at $50.99. It is on the list. So let me see. So I would do a calendar spread. So next week I would buy 54. 54 call trades at about 33 cents. And then let's see, sell 55 call that expires tomorrow. So that will cost me 24 cents. 20, let's see, 20, can I do it for 24 cents? Okay, so I'm buying 55. Sorry, I think I did it in reverse. I'm buying 54 and I'm buying 54, selling 55, and it cost me 24 cents debit. Buying 54 expires next week and selling this week that expires at 55 for 24 cents. Let's see if I got filled. No. About 25 cents. Okay. So I'm basically doing a calendar spread, right? I'm buying an option, 54 call that expires next week in case I need to wait and I'll give it a little bit more time. And then I'm selling tomorrow's 55 call because I don't think it's going to get much further than 55 by tomorrow, right? So collecting the premium at 55, and then depending, what happens tomorrow, potentially sell the 55 call again that expires next week. Just depends on where the stock is going to go. In terms of negative surprise, 50 is pretty well supported, right? 50 is pretty well supported. So I could also, on the downside, 50, it's too close, right? It's trading 51. 45, right? So let's see, Schlumberger. So now I'm just trying to reduce my costs so I don't have to pay 20 cents. And let's see. So not a lot of premium, right? Still negative Vanna at 49 strike. 22 cents. So I can sell 48. 49. Let's see, 48. So there is a negative Vanna at 49. 47 and a half. I mean, if there's a negative news, we could get to 49. So let's see if I buy, so I can just do vertical. Vertical. Let's see. Okay, so if the negative news come in, there's a big position at 49, which we could gravitate toward 49. So I can buy 49, 48 put spread. For, let's say, 11 cents. So I'm buying 49, 48. I don't think that, my bias is to the upside, so I'm not going to give myself more room. I'm just going to, hedge in case we do drop. I mean, energy is volatile. We do have options expiration. We could have a reversal, right? We could have energy base, especially if there's negative earnings, we could have drop to the downside. So here I'm just doing regular 49 by 48 put spread. So buying 49, selling 48 put for another 12 cents. So if we do get to 48 tomorrow, then this would worth $1, right? So I would make a profit of $1. If it reaches tomorrow 54 or 55 call, I would collect the short leg, and 54 call would cost $1.50. And then, but we do need a larger move in Schlumberger, right? And as of late, I mean, we did have a pretty sharp, we did have rally in January. How far did it rally? It's about 4% in January. For the most part, it's been kind of a quiet earnings, but energy prices have been volatile, so we'll see if that volatility is going to translate to Schlumberger. Well, somebody thinks it will, right? Somebody thinks we will get to 55. Okay. Then that would be my idea of the earnings. Obviously, Netflix is another. Any questions on any questions on the earnings? And by the way, I am planning to finish at 2:40. I do have to leave, so I'm going to stick around for the next 17 minutes. So if you do have any questions or you want to go over something, I know some of you joined a little bit later. I am going to leave at 2:40. So please answer and ask any questions. John hedging longs, which on Schlumberger? So Schlumberger, I did calendar spread, right? Long. I bought next week 54 call, sold 55 call, going into the next week. On the put spread, I don't think it's going to drop. So because higher oil price, but I don't know. I have no idea. That's just what I think. So just in case I'm wrong, I did buy 49, 48 put spread. Got it. Okay. In terms of other position, obviously all eyes on Netflix, right? There are two possible scenario. Retesting all-time highs around 700, very large positioning at 710, 700 level. Very large positioning, potentially on the downside, dropping, to 500 actually. So Netflix has to deliver. I mean, I think most people think that it will be a positive news, but people are hedging. Not a lot of VANA, so this is not large. I mean, but enough, right? It's a $600 stock, so you do have pretty large position at relatively large position at 550 that expires in April 19, and very large position in calls, selling calls at 700, 720, somewhere between 700 720. So it is positive, right? IVAL skew is positive, meaning it's a put skew where people buying puts and some calls. So I don't think there will be super. So that means that probably not going to have this runaway move like we had in United Airlines. Even Schlumberger, this is set up differently. So I think it will stay in the range, and based on implied volatility that I looked, it's about 100 points expectation. Let's just check now that the market is moving, but last time I checked, 2 standard deviation is about 100 points. 1 standard deviation is 50 points, but let's just double check because it actually moved since last time I checked. 608. So again, I'm looking at the puts and calls at the money. So 25 plus 25, 50, 50 plus 50, about 100, right? I'm doing at the money straddle, out of the money strangle, 25 each. So 2 standard deviation is 100 points. So it could get to 710, right? Or it could get to 500, right? Both outcomes are within reach, right? 500 is very well supported technically, and 700 is well supported as well. So, and Netflix, is a volatile company. It could move in those directions. Any questions? Let's see, how did Netflix do last time? So July, when the market pulled back, it did drop 10%. All right, 228. So those are the Netflix earnings. Procter & Gamble is also very well positioned in terms of put skew. So announcing earnings tomorrow, usually it doesn't move, but you can see it's kind of very well positioned at 150 and pretty well positioned at 165. So $8 to the upside, $6 to the downside, about 4 or 5%. That's usually how much Procter & Gamble can move. So same thing you can do. I mean, I wouldn't do counter spread because it's a put, it's a pretty large put skew, which well positioned. So you can do iron counters, right? You can sell out of the money calls, sell out of the money puts. Or you can do ratio spread, right? Buying 1 call, selling 2 calls, buying 1 put, selling 2 puts. So here, I think selling premium makes a little bit more sense. On Schlumberger, I think you want to be long the premium, right? Long volatility. Right? Procter & Gamble, short volatility. Schlumberger, you can be long volatility. Any other questions? All right, 2:30. Any questions? All right, so these are the earnings. Let's look at, we're approaching Friday in terms of other sectors. So materials, right, that's been a pretty strong sector. It actually broke, right, it had a new all-time high. It crossed above 2021 high. Now it's dropped below that level, 2 weeks in a row of lower price action. So materials are weaker. Home builders are 3 weeks in a row, pretty strong pullback. Probably next level is around 95. So pretty weak home builders on higher interest rates and construction permits and a 30-year mortgage back about 7%. All of them headwinds for the home builders. Metals miners are holding up pretty well, right? Your gold miners and silver is still strong. China continues to be weak, right? Kind of not going anywhere, trading sideways. VIX is at 18, kind of sitting there, so people are still hedging. Industrials, pretty sharp pullback in XLI 2 weeks in a row. Strong dollar, retesting 107, and weak yen. A lot of people talking about the scary trade that Japanese yen is falling apart, and if government interferes and tries to stabilize the yen, that could cause dislocation in U.S. dollar and treasury, and then equities. So I would keep an eye on that. REITs are pretty weak, right? So anything that's interest rate sensitive, selling off the most, right? So pretty sharp pullback in REITs, pretty sharp pullback in healthcare 3 weeks in a row. Consumer discretionary continues to pull back. Tesla is, in a pretty vulnerable position going into the earnings next week, right? It broke through basically May lows and potentially could reach January low, January of 23 low. Retail sector has been weak 3 weeks in a row, lower lows, lower highs. Transportation is weak. Telecommunication is weak. Insurance, travelers insurance, I think, announced earnings, and that didn't go really well. So pretty sharp pullback in travelers insurance, one of the better stocks. QQQ is down 3 weeks in a row, pretty sharp pullback in QQQ. It closed the gap, right? QQQ already closed the gap for NVIDIA earnings, right? So it's now sitting basically at the same price level as before the NVIDIA earnings. So if this level doesn't hold, next level is 417, 413. Semiconductors, pretty sharp pullback in semiconductors. Dow Jones is pretty weak. But it looks like a building support, right? So Dow Jones 4 days in a row is not making new lows. So I think Dow Jones and value stocks 4 weeks in a row not making any lows, so that's good. That means that we're probably close to at least some kind of a rebound, because right, this is wave A, right? Pretty sharp wave A. There's got to be a wave B, right? And then potentially wave C, right? So the question, when does B start? Maybe it's already starting in value stocks, and then are we going to have wave C, right? Those are the two unknowns, and depends on a few factors: earnings, macroeconomic data, and geopolitical risks. And you can see health, today consumer staples bouncing back, healthcare. I mean, banks are trying to bounce back, etc. All right, it's 2:35. I'm planning to leave in the next 5 minutes. So I'd like to finish at 2:40. Sorry, I apologize. I have an appointment. I can't miss it. But tomorrow is options expiration. I think tomorrow, Monday, Tuesday is going to be pretty vulnerable as people reposition. Right, we could have a big rally, or we could have a sell-off. We do have Netflix earnings, which makes sense. That's people probably going to pay attention to it, but usually doesn't move the market. We can imagine whether it's a good or bad earnings that it's going to move the market. I think people are going to probably pay attention to Amazon, right? AMD next week. So that's Tuesday coming. Let's see. Nothing of interest. I mean, Qualcomm, MasterCard. So we're going to have more earnings in semiconductor space, credit cards, and Apple Square. Okay, so Apple, Tesla, Amazon, that should give us a good, by next Friday, we should have a good idea what this earnings season is going to look like, right? And then the following week, the rest of the companies. All right, any questions? Cecile, yeah, Procter and Gamble. I can tell you, you could do iron condor, Procter and Gamble. So I can tell you the short strike that I did on Procter and Gamble. So I sold. I mean, there's not too much premium, unfortunately, but I did sell 165. I didn't get to, usually I'd like to get 25 basis points, but I'm just, because there is such a large positioning, right, at 165, I think we could get to 165. I don't think we're going to get much further, but I would sell 165 call, and that's what I did. And you can do it as either iron condor, you can do it as a ratio spread. I did it as a ratio spread. I think tomorrow is going to be volatile, so expect more volatility. And then I did sell 146 put. I sold 146 put, which is this guy. Actually, here there's not enough. It looks like it's pretty well positioned. So 146 is the put that I sold. You can probably sell 147 as well. Cecilia. So iron condor and Procter & Gamble, I think it's pretty well positioned, right? But there's a very large demand in 165 call, right? So on a maybe buying one call and selling two calls, like a ratio spread, right? Buying 162.5, selling 165 to 165. If you can do it, or butterfly, because if they do have good earnings, then there is a high probability that Procter & Gamble will reach 165 tomorrow, right? Because of this large positioning that you see in here. I mean, granted, it's in May, so it doesn't have to be right away, but there's also relatively large position in tomorrow's expiration as well. I'm actually thinking about buying 165 call that expires next Friday as a potential trade. Let's try that. Let's see, Procter & Gamble. Do I have Procter & Gamble on the list? I do not. Okay, let me add it and we'll trade it, and that will conclude the session. Okay, so let's look at earnings power trader. Procter & Gamble. I'm just going to buy a call 165 call that expires next week in case market is due for rebound, and a lot of people think it could get to 165, so maybe they're right. $165. So I can do calendar spread, just buy 160. So maybe that's better. So let's just create my own. All right, so selling by next week. 1, 1. All right, so I'm selling tomorrow's, and I'm buying next week. Both 165 call. And this would be a debit of 16 cents. 16 cents. So instead of spending 32 cents, I'm spending 16 cents. So 10 basis points, which is a cheap way to trade. Okay, I'm not going to do puts. Or you can do puts if you think it's going to drop. You can do the same thing on puts. But this is basically a calendar spread, right? Basically giving myself a little bit more time to reach 165 level. And by tomorrow, probably not going to go much beyond 165. So I'm going to capture that premium and apply it to the long side. On the downside, there's a lot less enthusiasm in put buying. All right, guys, I do have to go. You guys have been great. Thank you very much. And I will see you next Thursday on Tradier Hub. Thank you very much for joining us. We'll see you same time next Thursday. And Yellow Tunnel Trades from Community, I'll guys see you tomorrow. Thank you very much and have a great day.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.